Speak to us on our socials at KBC Channel 1 on all those platforms. Let's move on to our next item. Stakeholders in the pest control sector are pleading with the government to exempt repellents used in the fight against malaria from value-added tax. CS Johnson Company, which appeared before the National Assembly Finance Committee for the Finance Bill 2025 public hearings, said that this would lower the cost of products to boost the fight against malaria. The Kenya Association of Air Operators, however, had a difficult time defending tax exemptions amid poor performance of the aviation industry. Kamchemeza is on that story.
Pest control sector players say the exemption from tax of raw materials used in the manufacture of special mosquito repellents will ensure their affordability for Kenyans in malaria endemic regions.
Over the last 11 years, we have been on a mission to produce at scale special repellents in the fight against malaria, which is what is bringing us here to bring our submission to get some exemptions related to that project.
You must have seen, if you come from the malaria endemic regions of the Western Kenya, Rift Valley, and probably Nyanza, you must have seen it being tested there at no cost at all to the Kenyan citizens or those who deserve it the most.
They say the repellents are not listed as zero-rated products, subjecting them to 16% VAT.
I am aware that there is mosquitoes that become repellent resistant. We have invested very heavily on entomological research. Have not stopped that research. So if anything is going to be evolving from an entomology perspective, then we will be at the forefront of being able to be ahead of it as well.
Another exemption that we are requesting for is on IDF and RDL. We all know the inputs that go towards manufacturing of these special repellents are very specialized, and most of them are not readily available within the local market.
This comes as the Kenya Association of Air Operators was hard-pressed to explain what growth the aviation industry has gained from tax incentives given by the government.
You find like Air Tanzania or Uganda, they are improving. They are getting new aircrafts. Whereas in Kenya, we are still going down. Yet you have been given some benefits.
KQ is only one operator out of 78 air operator licenses that exist in the country. And so sometimes we get lost in the fact that KQ KQ equals aviation in Kenya. KQ is not equals to aviation in Kenya. There are a lot of operators. In fact, there are more than 5 national carriers, I believe. And maybe one of the proxies to growth of the sector in the period is what my CEO mentioned, is over the last year and a half, we've had more than 30 new aircraft on the AOC register at KCAA because of the certainty that was demonstrated by the tax policy.
The Finance Bill 2025 seeks to reintroduce VAT, import declaration fees, and railway development levy on aircraft parts and maintenance services, measures that would fundamentally alter the cost structure of aviation in Kenya. The public hearings continue tomorrow. Kamchemeza for Prime Edition.